Traders, this is Christian from Biotech Trade Group, and this is your end of day market recap for Monday, November 17th. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that I am going through is for information purposes only. If you are newer to watching my end of day market recaps, basically what I try to do in these recaps for you is just kind of give you a sense of what is going on in the market. I try not to be biased in these videos. Like, I'm not trying to convince anybody to be bearish or bullish. I just basically give you the price action and kind of let you know. I will kind of give you the, if I give you a number where there's 70 out of 100 stocks, there's 70 that are going down and 30 that are going up, I'm going to tell you that that's bearish. So I do give a little bit of conclusion, like the obvious conclusions, but for the most part I try to kind of give you what's going on in this market so that you can also make your own opinions, right? Rather than what I see a lot of these days is everybody convincing one another that of this particular narrative or that particular narrative. I try to just give it to you pretty plain and simple. So, number one, indices broke the streak. We've been seeing some very positive Mondays. I think we had something like, I don't know, 10 or 11 straight up Mondays. So, this broke the streak. And, I said this in the weekend video to members. I said that the more and more people who start to talk about one of these patterns that we get going on, it usually ends. That's just the way it happens in the market. The more and more people begin to be onto something, a pattern, that's usually when it kind of halts. So, yep. SPY finished down about 1% for the day. Qs finished down 90 basis points. Dow, which made a new high last week, has been underperforming since, and that broke through. That broke through Friday's lows, by the way. SPY and the Qs didn't. I think SPY bounced right around the lows, but I'll go through those charts in just a second. IWM was down 2%. Now, another big move down for both small caps and micro caps. Bitcoin down 2.6%. Gold also down 1.2%, and the dollar was up, and the VIX was up 1281 to finish about 22. So we're now back firmly above 20, as you could see from the price action and the red versus the green on your screen. Once again, biotech is the standout. Very nice performance. Biotech rallied from the open and finished up 0.7 of a percentage point. Wonderful for biotech, healthcare, and utilities. Utilities finished up 0.9 of a percentage point. Healthcare finished essentially flat. Semis finished down 1.4%. Uranium stocks finished down 2.3%. Just kind of going through some of the outperformers and the underperformers. The banks really got hit hard today. They were down 3.6%. Home builders down 3.1%. The overall financial group was down 1%. Oil services, energy's been outperforming a touch recently. That got hit today. That was down 2% for the day. And what else? Retail stocks also down 1.7% for the day. So not a good day, not a good way to start the week. Look at this performance now. Once we looking at this now month to date, these numbers are starting to pile up a little bit. One of the things that I'm going to jump to right now is that low volatility we know has been outperforming. SPLV, which is like super value, that's your lowest volatility equities, are now up 1.7% for the month, and high beta is down 6.1%. SPY is now down 2.4% for the month. Qs are down 4% for the month. IWM is down 5.5% for the month. And here's where it gets pretty ugly. When you look at the ARK Innovation ETF, and as well as the IBD ETF. These are both down more than 15% now. They've really gotten hit hard. Now, I want to talk a little bit about that. I did that for members over the weekend. Again, you have to be a member of Tribeca Trade Group to kind of get my my weekend commentary. But I'm usually pretty optimistic. I usually talk about what's going on in the market, but overall, like pretty optimistic about the future. This week, I just after what we saw on Friday, which I thought, and I talked about that briefly in Friday's video, if you watch that, I said that this is a bounce in these high growth names. They're oversold. And what I typically look for is for things to kind of retake and not just bounce. We could have some really great bounces. Again, I'm going to say something, but I don't want anybody to take it the wrong way. I just know from my trading history, some of the biggest bounces or the most vicious bounces occur. And again, I apologize for saying this, but it's just an example. When you're in a bear market, some of the counter trend bounces uh, can be quite vicious. And I feel like that's what we got for the first half of Friday. And again, I'm not saying that we're in a bear market. I'm just saying that when price action is trending down, some of the bounces can be quite huge. And you kind of have to understand, like, even though things look pretty good off of that bounce, like middle of the day, I started looking around at charts like Robinhood, for example, and I said, "Hey, we didn't take back any ground. You know, look at how far the price action got below the 5-day moving average. It was kind of stretched to where we were when we opened on Friday. So, why am I looking at this stock? Well, because it's a stock that I like, but it's also a stock that's breaking down at this point. Right? It is broken below the 50-day moving average. Now, it is still in an uptrend, but it's lost the momentum. Right? It's lost that love and feeling. Right? Here's the 50-day moving average, and you could even look at the 20-day moving average too. But this is now trending down. Where does this go down to? I don't know. Maybe down to this VPOC, which is another 8% lower. And this is a lot of stocks that look like this. There's a lot of stocks that have now broken below their 50-day moving average. Let's begin to kind of look at the SPYs here for a minute. SPY, we have our first close below the 50-day moving average since April. All right, so that's a change in tone. I'm also watching the bottom of the value area. Notice it's pink and it says bearish monthly. So there may be some support coming here at 658.91, but we are starting to kind of break lower at this point. Notice the lower highs. I talked about how we were kind of in a triangle type pattern on Friday. Maybe we're breaking down out of that triangle pattern. Don't know. We've got a lot of data that's coming out this week. Let's go through and just look at some of the I want to look at the 1 hour chart just so that you could see where that's going to come. But I mentioned that we kind of got down to Friday's lows and we're kind of right around there. So that whole big bounce that we had on Friday, that's that's now gone. Right? And we're back to where we were on the lows of Friday. Not a great sign in my opinion. 658.91 is your support, right? Which is about another 1% lower. Let's go to the Qs. Right, same thing, another kind of like triangle type pattern that I've got drawn here. And notice that that's a close below the 50-day moving average. First time that that's happened as well since I believe April. Right here. Right, and there's a pretty significant lower high. Now, where's your support here? 596.20. So we have to see what happens when we get down there. But is this strong or is this weak price action? Again, kind of the same thing. Look at the big bounce that we had on Friday. So I think I was pretty spot on about that. I had a hunch that was just an oversold bounce, and we're right back to where we were. Now support is going to come at 596.21. Now let's look at IWM. Is this bullish or bearish? All right, this already sliced through the 50-day moving average. It tried to retake that. Right, did that in the beginning of last week, and then failed. And we're now drifting down decently below the 50-day moving average. And to me, that looks like a breakdown in IWM. Right? Here's your VPOC takeout. There's the bounce, but just couldn't go anywhere with it. Next line down in the sand is probably 226. Just make sure I don't see anything on the 1 hour. Look, we did take out a VPOC down here today. So we'll see if we can hold that. And if not, there's that 225.91 level. So again, VPOCs sometimes when they're lower than price action, as this was, sometimes there's demand here. When it's above, that's where there's supply, right? Overhead supply. Let's go through a couple other charts. Let's look at the micro caps. It's a pretty big break of the 50-day. It kind of looks similar to what I just showed you in IWM. Diamonds, right? I'm guilty of this too. Last week, saying, "Hey, it's pretty good sign. Dow's are, Dow's out a new high. This closed right at the 50-day moving average, but again through Friday's highs, so holding up a little bit better. I think the market likes right now, high dividend or steady dividend paying stocks, steady growth. Is what you have in the Dow stocks. So holding up a little bit better, but way off the highs, right? And from where we were just a couple days ago. So there's a lot of traps when things are breaking down, as we've seen more stocks going down versus going up. Breakouts, and I know there's a lot of people who have mentioned this, and I'm going to say it too. Breakouts tend to work less frequently when you are acting as we are acting now with the environment that we're in. Now, what's causing part of this stuff going on? And I'm just going to bring up what else did I want to bring up here? So that's Dow. Yeah, we could look at the ARK Innovation ETF. It's still holding above that Friday's lows, but that's pretty bad. FFTY, all the way almost down to the 200-day moving average. Right. So, I mean, that's something to watch, right? These are your big growth stocks that everybody likes. Your most popular growth stocks are in this ETF. If you don't believe me, IBD 50. So again, it's always a good, for me, like it's a good proxy to pay attention to. IBD 50. Let me bring up the holdings here. I got the wrong page up. Micron is one of the biggest holdings. NXT, CLS, Robinhood, CRDO, Palantir, Rambus, Dave, HWM. Right, so high growth. Lily's in this too, which has been acting really well. But that's what you got going on there. Now, what has caused part of this? And let's look at Bitcoin too. Right, because this has been breaking lower. Failed to test the 200-day moving average, moving down. So, in my opinion, you've got a couple different things going on, and sometimes that's what it is. Sometimes it's not just one thing, even though people like to hear just one thing. But I think part of this is what happened on 1029. Right, we had heard about that. There's a lot of high valuation in the market back then. Right. And I'm gonna put this back to how it was on 1017. It's kind of nice that you could do that. It's a nice little feature. What I'm looking at is this line. 12. So going back a month ago, they were pricing in about 100% chance that they were. You got to remember that they already cut rates 1029, but for the 1210 and meaning, they were pricing. They were fully pricing in the chances of a rate cut. Now, what happened? Well, Powell came out and he said, "Well, there's no guarantee that we're going to cut interest rates uh, for the next Fed meeting on December 10th." So we went from 100% probability that that was going to happen, what Fed fund futures were pricing in, to a hiccup. We're now down to 42%. Now, this is bad and good. Right? This is what's part of the reason is the market has had to reconcile what Powell has said and other Fed speakers. We've heard a couple other Fed speakers last week that said, yeah, we probably don't, we don't necessarily need to cut interest rates in December. Well, what's happened since then? So let me go back to the charts. Right? Because essentially you're saying that you're not. So again, this I'm going to take a step back here. The interest rate that we are at right now, and this is where there's some confusion about this, right? People think cutting rates, right? Oh my God, the Fed shouldn't be cutting interest rates right now. The market's at its highs. Well, I my opinion is look at the prevailing rate. Right now, the implied rate is 4%. Is that tightening or is that inserting liquidity into the market? I would argue that 4% is tightening, right? And I retweeted Steve Grasso, who's on CNBC this weekend. He's talking about the same thing. 4% are where we were at 5%. 5% is very restrictive. And I think that's where some folks get a little bit confused because they're thinking about, oh, geez, the Fed just cut interest rates twice. Well, that's because they're at a very high restrictive rate. And 4%, in my opinion, is also very high. And again, you could look at this over time. which I've done this before, but you could look at every time. So it's been a while since I've done this comparison. So I'm going to bring this up here in Bloomberg. All right, I'm going to bring up 25 years. That's going back a little bit too far. I hope that you can. Oh, there we go. You should be able to see that. All right. Every time that they've yanked up rates like this, right? And again, they had ample reason to do it. In 2003, 2004, the housing market was going crazy, right? Well, what did they do? They raised rates up to 5%, and then they crushed the, amongst other things, right? There was a lot of leverage in the housing market. There was a lot of leverage in the financial markets, right? Well, what did they do? Right? Well, they put the rates too high and they kept them there, right? That exasperate, in my opinion, again, you could disagree with me about this, that's fine, but they exasperated the situation. And then they had to drop rates in a hurry once they realized what they did, right? So they kept them here for about, was that about a year? They kept them at 5%. Our economy has not, over the last 25 years, has not been able to be in a happy place when you hold rates that high. We just don't. It just is something that I've seen since, this is my trading career, right? Over this time period. Same thing when they, in the 2000, right? They had rates over 6%. What did they do? Well, they pricked the bubble and they caused stocks to do nothing for about 3 years. Now, again, part of that was this speculation. So yes, they're bringing it down, right? I don't know if they're bringing it down fast enough for what's going on. And again, so let's go through a little bit of the weight of the evidence here, right? So let me bring the charts back up. All right. So first of all, here's IWM. Now, this to me, this is when the Fed meeting was, right? So it wasn't the ultimate top here. The high of the year was 1027. Right? 1029 is when they came in and they said that they may not cut interest rates in December. Look at what IWM has done since. It's broken down. It's down about 5% from there. All right. Let's look at some other areas of the market. All right. I'm going to bring in this screen that I have up. All right. So this is all the equally weighted sectors in the S&P. Now there's some strength out there, right? And I know I'm a firm believer of, I'm a believer of this too. Look at how well healthcare has done, right? It's doing well. Energy, you can kind of make an argument for that too, right? That's this one. That's this guy here on your left. And then there's utilities on the bottom right. But look at what's going on in the other places of the market. Right? Again, these are all equally weighted. If you're not familiar with these tickers like RSPT, it's your equally weighted technology. Then this look at, so this is the makings. And again, you have to be careful when you say head and shoulders pattern, because head and shoulders patterns, there's many things that could look like a head and shoulders patterns, but it's not a head and shoulders until it breaks the neckline. Right. So look at what's going on here. You have the makings of that. There's RSPT. What about this one? Industrials. Industrials has gone sideways for a couple weeks. That doesn't look particularly good. Communications companies, top left. Right. This has been going down. Some of these have been going down for about a month. Right. Here's consumer discretionary. Right. Does this look healthy to you right now? So the reason why I'm going through this is, again, I'm asking the questions. You think about it, right? I had somebody just before I started this video. I'm going to bring up the next picture. By the way, let's see I thought this was an interesting chart. Hope you could see that. The yellow line, or excuse me, the candlestick chart is Bitcoin. And notice what's happening. The yellow is the ARK Innovation ETF. The red or the orange here is the IBD 50. Notice how they're all kind of doing the same thing, right? High speculation, momentum, um, higher valuation, right? So that's what's going on here. What's the other chart that I wanted to show here? I got to flip the screen again. Let's try this one more time. So this is consumer staples XLP versus XLY. Now, I just posted this a few minutes ago on Twitter, and somebody said, What does that mean?" Well, you could, so this is the problem, and I know like AI is a big topic right now. As a trader, you should be thinking through, you should be using your brain. You shouldn't just be asking Grok every time you see something that you don't know. Well, what's consumer staples? It's things like Procter and Gamble, things like Colgate Palmolive, Walmart. Right, that's what's in consumer staples. What's in consumer discretionary? Well, that's things that more like Amazon, Tesla, travel companies, right, airlines, right, where you have discretionary income, where you have money to spend. Well, what is starting to outperform here and come off the lows? And this started last week, but there wasn't really any trend change, so I didn't mention any video. But consumer staples is starting to outperform. Do you think so? If staples, Procter and Gamble, things that you have to buy, right, that you can't do without, right? If that is outperforming your discretionary, are we in more of an aggressive or more of a defensive situation? So you could think about that yourself. You don't need Grok to give you the answer. Use your brain. Now let's put SPY in here, right? Because the last time that consumer discretionary, consumer staples. So sorry, Laura, I don't want to give away the answer here. So let me just X this out for a second. What was the last time that staples outperformed? So I'm going to go back a little bit more than a year. Let's go back 2 years. All right. This other situation here in the beginning of this year when consumer staples also broke to the upside versus consumer discretionary. Was that a bullish sign or a bearish sign? Well, let's put in SPY and see what the overall price action did then. Well, this started to outperform. And what did SPY do? Right? It did this. Now, this is just kind of starting this. So this is something that we want to keep an eye on because if consumer staples really starts to pick up like this, it usually means that something like this could happen. Right? You could look at some other situations too where it wasn't as deep. So just something to be prepared of. Now, we've got a couple things that are going to happen this week. We've got a lot of data that's going to be coming out on Thursday. So what I would be hoping, if you're bullish, is that we get data that's not that good, and that convinces the Fed that they're going to have to act on December 10th. And I think right now that could help the market pretty decently. And I think it's actually a good thing that if they do turn what they're saying recently and they acknowledge that they're going to need to cut interest rates, the market is only implying about I think it's 43 when I had that screen up before, 43% chance that that is priced into the market. So you go back to 100 and probably IWM, some of the more high growth names are probably going to like that, inserting liquidity into the market. If they don't, then you might want to be keeping an eye on what some of these things are doing. Right now, I will say this as we kind of go back to the SPY chart. What I'm encountering, and you may think differently, right, is a lot of complacency in this market. If I mention any of this stuff on Twitter, the responses, probably 9 out of 10 responses have been to me. Well, we're in a bull market. So, we got a little dip going on. That may very well be, but I don't have a crystal ball. You don't have a crystal ball. So what do? Right? We watch our price action and we watch for changes. Now we know that breadth has not been good. The McClellan Summation Index has been trending down for both New York Stock Exchange and Nasdaq for over a month. So there's more names that are going down versus going up. That's been one of the first. These are easy things, right? Even though I was away from the screens this weekend for the most part, I was traveling, but I can't believe the amount of complacency that's in this market right now. But that's just me. Maybe your view is different, but I see everybody telling me, oh, this is a bull market. It's a bull market. Well, what happens when is somebody going to hit you over the head to say that when the bull market ends? Um, because I hope, let me know who does that for you. I think watching price trend, what's going on. So price trend, what's going on under the hood. If I see breath begin to pick up, if I see breakouts work, then I know that, because I'm not personally a bull market, bear market person. I know people love to hang their hat on this stuff so that they feel warm and fuzzy and all comfortable because because it's classified as a bull market. But at what point, you know, and again, all I'm doing is running some scenarios here. If we break this, right, SPY breaks below the value and starts going down here, are you still going to say it's fine because we're in a bull market? And same thing with the Qs and IWM. How far does IWM need to go down before you say, well, maybe this bull market isn't so strong? We've got breakdowns all over the place. Now, there's some areas that are holding up pretty well. I mentioned XBI. So again, I'm not trying to be full on negative, full on positive. There's some good things that, the XBI at new highs is pretty good. I'm long XBI and the TTG trend portfolio. But what I see right now is a lot more stocks going down versus going up. Right. And again, that's evidence. You could look by several different things. You could look at the advanced decline line. You could look at the summation index for NYSE and NASDAQ. You could look at 4-week new lows versus new highs. Right. We had a couple days last week where the new highs were greater than the new lows. But I'd say for the last 2-3 weeks, outside of like 3 or 4 days, there's been more new lows, more 4-week new lows than new highs. So that's what I would be watching. So watching both price trend, some under the hood things like consumer staples versus consumer discretionary, or low volatility equities versus high beta, and then watching what the Fed does as well and what they signal, right? Because that might turn liquidity on. Here's low volatility versus high beta. Notice this is also above the 50-day moving average and starting to break higher. All right. So again, just trying to give you what's out there so that you could see from some of these charts and make your own opinion. But I would say for me, I think that there's a lot of complacency out there in this market. Everybody remember the beginning of November, the seasonality experts, everybody said we are now entering the strongest period of the year. Well, one of the things I said was, well, seasonality wasn't exactly right for September and October. So now you're going to think it's going to be right for November? I don't know how you can make that conclusion, right? It didn't work because the market is supposed to be weak in September, right? You kind of have to think about this problem too. And I went over this in Sunday's video, but part of the reason why the end of the year is so strong in November and December is because you just recently had a dip for the majority of times in September and October. So you didn't get that dip, but now you think we're going to just rally to, you know, to all-time highs, no problem. So if you're going to use the seasonality argument, don't you have to kind of add these things up together? So I'll leave it there, guys. Again, I'm not trying to be super negative or scare anybody. I'm just trying to give you the facts. And we've got the SPY and the Qs that for the first time since April broke the 50-day moving average. Also, we know that breadth is terribly weak and has been for the last month. So let's see if things change, right? And maybe something with the Fed, maybe something other could get us going again. Guys, have a great night. See you tomorrow. Oh, so by the way, what is the goal when this goes on? Right? The goal is to not lose as much money when the market is acting very poorly as it has been. All right. That's the goal. That's the whole thing. And to make a